What a day, what a day. Another amazing day comes to an end. Hope you guys had a fantastic Thursday in the markets. It's about that time of day ago, isn't it? Time to get back to work tonight. Friday is right around the corner. It's Thursday evening. It's May the 12th, 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight, very important, my job is to help us find the best trades, setting up for Friday's trading session. And boy, do I have a video for you guys and gals here tonight. A ton of trades setting up for tomorrow's trading session. I'm going to cover all my favorite setups in tonight's video. That way you have a game plan to make some money on TGI Friday. And of course, before we jump in and get this party going tonight, got a lot we're going to cover here on this video. Before we jump in and go over each of these trades, you better subscribe to our YouTube channel. I publish this video every evening with my best trade ideas right on this newsletter video. So make sure you subscribe, hit that little bell icon so you don't miss tomorrow night's video. Also, any questions for me, drop those questions in the comment section. I do go back and personally answer all the questions, so don't be afraid to ask questions if you got them. And if you enjoyed the video as much as I enjoy making it, if you use this video to get your charts right, get that mind right for tomorrow, hit that like button. I appreciate you guys supporting this YouTube channel. So make sure you subscribe, hit that like, and let's get ready for Friday's trading session. Where's the low-hanging fruit for tomorrow? Where's the money we need to finish up this week? It's been a really, really good week so far, and I'm looking forward to finishing things up here firmly in the green with you guys tomorrow. Now, S&P, Nasdaq, crude oil. Boy, I'll tell you, there are some tricks on these charts tonight. If you're not paying attention tomorrow, these markets are setting up to pick your pocket tomorrow. You'll see what I'm talking about as we go deeper into this video here tonight. Everything is bearish on the E-minis. The S&P is bearish. S&P is Nasdaq is bearish as well. But I'll tell you, once you see the charts tonight, you can see there's a range in here. There's a lot of trickery going on right now in these E-minis. I'm going to show you why I think these markets are a bit challenging for tomorrow and how you can do the trapping and the tricking on your own account tomorrow as well. I'll give you a game plan on those here. Oil is bullish right now, but just like the S&P and the Nasdaq, something just doesn't make sense on it. And I'll talk about why I don't think it makes sense. And I think that if you understand why it doesn't make sense, you'll see how you can make some money off it as well. So I think the name of the game is really for tomorrow is what didn't happen, right? What didn't happen today? What did the buyers not do today? What did the sellers not do today? I think what didn't happen today is probably going to unlock the biggest clues for us, the biggest money-making setups for us here tomorrow in our trade room. Now, before we jump in and get this party going, each of these individual charts tonight, let's just make sure we're all on the same page for tomorrow, because tomorrow is a Friday. Now, Fridays are kind of known for being a smaller window of opportunity. There's no major news tomorrow, right? We got a couple of Fed speakers at 11 o'clock and 12 o'clock. So there's no big catalyst, at least that we know of. You know, obviously, we've got the situation in Ukraine. We got the Fed and interest rates. A lot of stuff that's out there that may kind of spring into action tomorrow. But as far as what we know about right now, and this could change, obviously, very quickly, but there's no scheduled catalyst for tomorrow besides the Fed speakers explaining to us how they're going to fix this mess they put into us, right, at 11 o'clock and 12 o'clock. But what you want to remember is that trading is like riding a bicycle, okay? It's so much easier when the markets are moving. So I say this because it's been a wild, wild week, and Fridays are kind of known for being one of those days where the window of good price action is usually a little bit smaller. So your best bet for tomorrow is, what I always do on a Friday morning is I know that my job is to get there early, try to find my trades early, and then get the heck out of the way early. As the day gets older, the markets get thinner, the personality gets less consistent. It's just not as easy to get the results you want out of the setups. So earlier the better. And again, if it's moving well, trade it. But if it's slow, if it's sluggish, again, Fridays can be like that sometimes. Remember, trading is like a bicycle. It's easier when it's moving. So if it's moving well, trade that thing. If it's not moving well, wait for it. And again, think about the earlier the better, typically on a Friday. And of course, we're going to find out if we do hear any news events overnight. Hopefully something will come out and kind of give these markets a bit of a kick in the pants tomorrow morning and kind of get this Friday going off on a good note here. But No major catalyst on the news schedule here for tomorrow. So again, earlier the better. Think about that bicycle metaphor, right? Trade it if it's moving. If it's slow, be careful. And we'll go over a good roadmap here tonight in this video. S&P, NASDAQ, crude oil, everything's ready. Now, whether you trade one of these markets or you trade all of these markets, I'm going to cover my favorite trades on each of these markets here tonight. You'll learn something new throughout the entire video. And you know me, I like to provide different variations, different advanced tactics, and I like to kind of save the best stuff towards the end of this video. So even if you only trade one of these markets, I would encourage you watch the whole thing all the way through. I'm going to save the best stuff for last. And again, there'll be money making learning opportunities throughout the entire video. So with that said, let's jump right into the S&P and let's get this party going here tonight. So what didn't happen on the S&P? You know, that's a big clue here today. I think one of the most important things we need to think about here across all three of these markets is what was the tone of the market going into today? So, for example, I think the most important thing right now on the S&P to understand is that when we came into the session this morning, we had that big move down, right, from yesterday. And we talked about how if it popped and grinded lower, we'd find those channels, right? And we'd sell off the high of that channel. We also talked about if it made a big move down, we'd probably get that pull back, use those prior lows as resistance, and then look for that short back down again. So think about what happened. The market makes a kind of a choppy move down, right? One of those pop and grind moves down we always talk about. So there's scalping opportunities on the way down. Then they get that big deep pullback towards the end of the morning. Bears come in just as we expected, and they send this thing all the way back down to those lows. Now, when they get back down to those lows, what do? Do they keep it going? No, they don't. They stall out at those lows. And so when they stall out like this now really there's a magnet now that turns on right back up around these highs. And so you start to anticipate now the market will start to rotate back up towards that next zone. And we basically begin to create one big trading range. That's kind of the personality trait of this market that you want to think about. We had that big move down yesterday. It makes perfect sense. They're going to pull it back, sell high. We talked about this last night, and then run it back down to retest a low. They take out those lows. They don't keep it going lower. And now we have to assume that unless this new range forming here, unless that really gets its hooks in this thing, it's going to want to start making that move back up to those highs. Of course, once we get back to those highs, do we break through those highs and head back to that 4,000 because, hello, there's that huge range above us? Or do the bears get another shot to sell off that high and send it back down again? That's kind of the key component, I think, about this market right now. So where we stand at this point is, really at this point, are we going to finish off this move back up? Or are we going to use this range as the magnet, make that move back down, and potentially break through that low or bounce back up into that trading range? So this is what I see as being the most important thing affecting this market right now. It's almost what didn't happen, right? The bears didn't push through that low. The buyers haven't taken out that high yet. Now we have a kind of an idea of what this market wants to do. Now let's find a way to go out and trade it. Now, as the price goes higher, as the price goes lower, we want to think about who has control of this market right now. It's overall bearish, but as we rotate off this low, it's going to start picking up momentum for these buyers. So a couple setups I'm looking for as we, really as we go higher here. One would be if we run back up to retest this high, really, and it could be the top of this channel, anywhere up in this area here. I think my favorite setup off that high is one of those classic two-try failures into a hidden channel pullback. In other words, as we go higher here, I'm trying to trap in those buyers once, twice. Remember, this is major resistance in the top of what should be a big trading range. Horrible place for buyers to be buying once they try a couple times up here. And the reason why I recommend twice is because, again, of all of that momentum rotating off of that low. Once those buyers try a couple times, think about where their stops are. Their stops will be right below that low. This is where their stops will be. That's where their pain point is. That's where those buyers become become sellers because they're forced to get bounced out of those long positions. This is exactly where we can look for one of those two try failures. We think about where stops are, we find a nice strong signal, and we simply sell into those stop losses. Now, where do the markets want to go from here? The markets want to go back down to retest that low, right? Remember, it's one big trading range here. So at this point, your job is just getting started at this point. Now, as the market now starts to roll lower, this is really where the fun begins. We can now mark up that low, mark up this high, and you know me, I always love traps. I find those prior swings and I look for those traps, right, off that high. You can see a good example of it back here, right? So as we go up, buyers try a couple times, we're selling it as it goes down. And then in this example, right, we're connecting this low to that high, it pops up, and we're selling off that high. It's the same basic idea over here, right? Trying to sell off that high and bring it back down again. Now, the buyers have a great shot at this, at breaking free and going back into that big range magnet at 4,000. Remember, there's a big range up there, right? Earlier this week, there's a huge range all the way up there around 4,000. So the buyers have a great opportunity. We'll see if they take advantage of that opportunity. But they have a great opportunity here to push this thing higher. Here's an easy way to look at it, right? We could easily go up to retest these highs. If the buyers can then hold that pullback, again, remember, if the buyers try once, try twice, we're selling it back down again. But if those buyers, if they can hold that pullback and jump off that moving average, really pushing our way through that major resistance, now we know where the market wants to go. It wants to go back to that 4,000, and now we can drill down, find a new trend line by drawing off those highs, mark a low channel, right, by simply copying and pasting that line, and then you know me, I always love grabbing those first tests off the low of that channel, like a trap setup, a failure setup, a pullback combination. Now, I know a lot of you guys you've already taken the free trading course on the website. You've learned all of these setups, right? You know what a 1, 2, 3 breakout looks like. You know what traps and failures and pullbacks look like. I got so many emails this week alone from people who had taken that free course, learned the strategy, doubled their accounts, tripled their accounts. It's so inspirational for me to hear that stuff, by the way. I love getting those comments and those emails. But listen, if you're here for the first time today, if you haven't taken that free class yet, if you haven't learned all the breakouts and the setups, I would definitely recommend, I'll put a little link up here for you in the upper right-hand corner, and that'll be for our free trading course. If you're like me and you hate missing the best trades each day, or you're taking too many losses, making too many mental mistakes, that free trading course on our website will give you a perfect roadmap to get you back on track and start getting you on the right side of these markets each day. Again, grab a little pop-up there, learn the setups, hundreds of examples of how we apply everything in our trade room. You're going to love it. So grab that class link that popped up there, grab that free course, and that way you can start trading this stuff on your own. I have a couple more breakouts I want to go over on this. I have a few more breakouts, patterns to go over. We have 4 different breakouts we can use on this. I've covered one of them on this S&P. So let's come back. We'll do more breakouts here on the Nasdaq. We'll cover some more ideas of going higher on the Nasdaq as well. But as we go higher, 1, 2, back down, find that channel and dump it back down again. Now, what if we don't go higher? It looks like it's trying to right now, but what if we don't? What if we sink back down again? How can I sell it? Because remember, there's a range down here. So for all I know, this could have taken out that high and we could have right back down to those lows right now. How do I sell if we don't go higher here? Well, that's pretty easy. We now want to use a trap though. So the problem right now is if I sell right here, I'm selling a little bit lower than I'd like to. If I sell up here, it's a perfect spot to sell. But if I sell down here, I'm a little bit lower than I'd like to be. You know what I mean? There's probably a big support area here. I'd rather not sell right into support. So how do we sell without selling right into that support level? The answer is a trap. What you want is you want the buyers to try a couple times here and find a trap setup. Shallow pullbacks are great for, or should I say trap patterns are great for shallow pullbacks here. So as we start pulling back, watch those buyers try a couple times, and if you get a little trap right there, nice signal closing below that moving average, that's your short now. Where's my target? Target is back below that range, and target is back to that major low, right? Makes sense? All right. If you're liking this so far, hit that like button for me. I appreciate you tuning in and sticking around here. So that's if we don't get that pullback all the way up to the highs that we want. What if we go lower here? Can I buy it? Can I sell it? Absolutely. I can definitely buy off this low, because anytime we have a move lower and we double bottom, there's definitely ways to buy it. And I can obviously sell it too if we can get a breakout going lower. As we go lower here, let's say, for example, right, we do get that 1, that 2, that trap high and back down again. We retest that low now. Now what do we do now? Now we rope in those buyers again. Remember, it's one big trading range, right? You know what I mean? It's one big trading range. So if we go down to those lows, I can buy it back up. What's the problem though? Momentum. Momentum is the problem here. So how do we do it? We have to rope in. The way I think of it is if I have momentum on my side, momentum gives me an edge over the other side of the market. If I don't have momentum on my side, I need to create some sort of edge. And how do we create some sort of edge? I personally like to use the stop losses of the opposite side of the market, in this case, the seller stops, as fuel. Right? Because the easiest money you're going to make in these markets is when you're buying and the sellers are stuck short and they've got to cover, right? But basically buy their way out to get out of trouble. So if we can get those bears to try a couple times, I like to use the 2-try rule, as you can see here. Pull back to that moving average, get those bears trying a couple times. Think about where their pain is. Right? Think about back when you were a rookie trader, where you would place your stop, and that's exactly where you want to be a buyer. Now, what I'll do is I'll look for that proper signal candle, right? You're going to learn this stuff inside that free course link that I mentioned linked up in the right-hand corner. Once you find that signal, then we get long, right, into those stops. And remember, as the market now is going higher, where does it want to go now? It wants to take out some of these highs. Okay, so your job now is to find a way in before we get there, basically. Go out, find that new channel, drill down to your faster time frame. Again, I love traps. So I like to look for setups just below prior swings. This could be a trap. It could be a failure. It could be a pullback combination. Again, I'm not going over all these specific entry techniques here, but that free class will give you all the tools you need to do this on your own, right? Or of course, we'll do this together in our trade room. So another example, the failure into that first test pullback, rotating off of that low. That's a pretty easy idea, right? Pretty simple idea. The thing is, we don't want to try to pick the bottom. We're not trying to predict the reversal here. It's too bearish. Now, how do we sell this thing as it goes lower? Is it possible to sell this thing as it goes lower? Absolutely, but we have to retest this low. We have to hold that pullback, and the market has to literally jump through that low. Didn't do it here. Yeah, didn't do it here, right? So there's no guarantee they'll do it here. So again, we'll look for those shorts on the way down. We retest that low. Once we retest that low, now we pull back. The bears come in, they go, no, we're not done yet. We want that 38.09 3/4. They blast through that low, right? Blast through that low. What do? Do we chase after it? No. We don't chase after it. We mark up that low, we mark up that high, and we wait to sell high. Ideally, what would be great is to use that prior low in combination with that pullback. We did something like that today, right? Where that area here, right? That area right there, that was a prior low from a previous trading range. Is that making sense? Okay, so we break out of a trading range. When we get that strong, firm breakout out of that trading range, find that channel, drawing off the lows, up around the highs, and then look for that. Remember, it's always the first test of that channel. It's always that first test of that channel. And again, we'll wait for the signal, right? The trap signal, the failure signal, the pullback signal. You'll learn about that stuff in that free video class. All right, guys? So just kind of be aware of that. Also too, remember to make sure that punch is really strong. Okay? So if it just rolls lower, pulls back, and looks strong, but kind of goes like that, no, that's not enough, right? It's really got to be convincing through that low, because you can see that trend line coming down there too. Okay, if that happens, you know what's going to happen, right? They'll still try to once, twice. This could easily snap right back up into that trading range. That is one of my favorite trades, by the way, right? Strong move down. They retest the low, but they don't blast that low. And then we rope in all the inexperienced traders, the weak hands in the market, and we can buy into those stops and grab that, right? Grab that new channel, right? That first pullback off that channel. All right, guys, I have a few more breakout patterns to talk about tonight. Right, we'll cover some more breakouts in the Nasdaq. In the meantime, though, it looks like these buyers here might be trying to make a run back to retest again, and it makes sense. It makes perfect sense they want to go back to these highs. It's one big trading range, right? It's one big trading range, up, down, up, down. Makes perfect sense. We'll go back to that high here. We'll see what happens once we get there. That's the big question now. Over on the Nasdaq. NASDAQ is very, very similar to the S&P 500. There's a lot of really important clues on this. I think the most important clue on this NASDAQ is, again, if you think about where we came into this market today, we had that big move down from yesterday, right? That big move down from yesterday. We knew that if the market, right, kind of spit down and remember that pop and grind down, right? You draw that trend line, find those highs. It was pretty easy pickings, right? If you kind of use that pop and grind early in the session yesterday. The market goes too far, it then pulls back, and sure enough, right off that prior low of that trading range, bears come in and run it where? All the way back down to retest the low. This is the most important information right there. That's the most important information in this whole entire chart, if you ask me. Why? Because when they bounce off that low, it now puts a big bullseye right on that high right there. The only thing now, the only variable involved right now is will this range play in, right? How much, right? How much will this range play in? You know, that's the only real variable we have right now. And you can see there's a triangle, kind of expanding triangle there, a triangle there. You know, so there definitely is potential. We may, again, this is the same thing in the S&P. We may not make it all the way back to those highs, right? It may get stuck in this range here for tomorrow. It's been a wild week. It's been a fantastic week, but it's been a wild one. And so it would make sense that, you know, tomorrow being a Friday, it would make sense to be a little bit choppy and range bound. Again, we'll see what we get. I don't know, right? You know what's going to happen as much as I do. So, anyways, getting to the point here. As we go higher, right? As we go higher, bears can come in and sell off that high, right? As we go higher, buyers can break free of that high, right? Because you get that big range. That 362 level, look at that thing. It's just begging to be tested tomorrow, right? That's a beautiful magnet. We probably won't go all the way to last week's close. That seems to be a little bit ridiculous, but who knows, right? Who knows? Maybe Jay Powell will say something tomorrow that lights this thing on fire. I don't know, right? Maybe they'll find a cure for inflation tomorrow morning and market. I don't know. You know, it could happen, but it doesn't seem likely tomorrow. As we go higher, we're selling off the high. As we go lower, right, we're trying to buy off that low. Okay, I love that trade. Or we're trying to trade the breakdown as we go. All right, let's talk about this. How do we make money on this here for tomorrow? Remember, this trend line will be there. That trend line will be there, right there. So just keep that in mind here. I'll get rid of it right now, just to keep it simple. But again, it's very, very similar here that we talked about on the S&P. If we find our way all the way up, right, the pattern setup is very simple. It's very bullish, but we're at a major top. So buyers once, buyers twice. Again, think about where those stops are. Selling those stops, find that new channel, drill down, and grab that first test. Same basic idea. 2-try failure. First test is the best test. Off that hidden channel. Traps, failures, pullback combinations. That's an easy one. Now, what about a new breakout going higher? Okay, what will be a new breakout going higher? So we talked about this one on the S&P. We talked about the pop-up. We talked about the pullback and the go, right? That's called a 1, 2, 3 breakout. Remember that from the previous chart? What do we do? Mark up that high, mark up that low, and we buy that first pullback. This is a very reliable spot to get long. Again, the first one, not so much. Right? We see a lot of times where the markets make an attempt to go higher. They don't exactly break free and they collapse right back down again. right? So I can't really trust that pullback right there, unfortunately. Again, it's one big trading range. Okay, they're going to prove it to us they can get out of that range. So think about that 1, 2, 3 breakout pattern. Same idea we had on the S&P. Another one you want to think about. We haven't talked about this one yet. Another one would be a pop and grind, right? Pop and grind makes perfect sense in this situation. Okay, it makes perfect sense for all the bears, right, who made their money selling down here. This market starts to come up, right? Something happens overnight. All the bears walk away. And if the bears walk away, the market will begin to grind, almost like flutter, going higher. This is where that pop and grind comes into play. The pop and grind is a fantastic pattern. We pop up or we move higher. And now instead of pulling back and blasting off the moving average, now we begin to separate and we begin to kind of grind and grind and grind. Guys, once you see those grinders, once you see it kind of separate and start to grind, that's a very good giveaway. The bears in this market are walking away. At this point, in these situations, I really don't care where I am. I can mark off that high, mark off that bigger channel low, find those prior swings, because that's where the money is. Try to get underneath one of those prior swings. That'll also put you underneath the moving average in most cases. That's where traps happen. That's where failures get triggered off the moving average. And that's where stops get run for a nice, juicy run higher. Now, we know where the market wants to go here, 362.5, give or take, triangle up there. But remember, the first leg and the third leg is a really easy way to really fine-tune that exit. Okay, just kind of keep in mind. Again, we have a pretty good idea where the market wants to go, but think about first leg up, third leg are usually quite symmetrical. That will help you kind of fine tune that final exit. Again, this kind of pop and grind works in a lot of conditions. It'll also apply to the S&P as well. And if you were to drill down on a faster time frame from where we were earlier today, it was basically the same thing. It popped down, it grinds down, you're drawing that channel off that low, up off that high, and you can see that's all they did in those first few hours right here this morning. They bought it back up, took profit, and dumped it back down again. So that's another breakout pattern going higher here. I have a couple more breakouts we'll talk about here on the oil. All right, don't go Xing off here just yet. All right, got a few more we're going to cover here as we go to oil. Oil has a lot more potential for a flyaway day. You'll see why I say that in a second. If we go lower here, what do? If we go lower, can I sell right now? You can. What's my problem though? My problem is you're selling dangerously close to a major support level. So what's the setup you look for whenever you're selling close like that? Traps. Right? Traps are really kind of like they can be applied in so many great situations, like in this example, right? Traps are fantastic to give you that chance to sell, but to make sure you're selling as high as you can sell. Traps are very effective at that. Where's my target? Take some profit off at the low of that range and leave a runner down to that low here. Now, let's say we do get back to that low. Can I buy back up again? Absolutely. Great setup here if we can get back down to retest that low. So now we end up back at that low now, right? What do we always say? Mission accomplished, right? Anytime we make a big move down, pop it up, retest, mission accomplished. Remember, that's what happened back here, right? Mission accomplished right there. Okay, anyways, we end up back to that low now. Same as before. The bears now have reached their objective, right? The bears are now sitting at major lows. All the professional sellers took entry at the high and their exits are at the low. Anyone who's now selling into that low right now is by default the weak hands in the market. Whether they're inexperienced traders, whatever the issue is, this is not the place to be selling. So once they dig their own grave, once they wrap that rope around their neck, we know exactly where their pain is now. And remember, it's one big trading range. So where's the market want to go from there? It wants to take out some of these highs, right? It wants to take out some of these range highs up here. So now the fun part happens, right? Now I always go in, draw a trend line in here, look for a little support trend line there, find that signal. Again, you're going to learn all this stuff in the video course I mentioned earlier, and then grab that pop, right, as it goes higher. Remember, your job isn't done yet. Now find that new channel and grab that first test off of that low. And again, remember, I'm simplifying this a lot right now just to keep it simple and keep it short right now. But we'll drill down to our faster time frame. This is a 4,500 tick chart. We are not trading a 4,500 tick chart in the trade room tomorrow. Right? We'll drill down to our faster entry time frames, and we'll find the entry trigger coming off of that low. Where's our targets? Again, pinpoint these other highs. Right? That's where the objective is. The big objective is obviously back up to retest that major high. Again, thinking of this now as one big trading range. Right? Makes sense? Okay, as we go lower, we take out that low. The bears come in, they hold that pullback, and they jump, right? Big jump off that low. We find that new low, right? They do trend line. Okay, we draw that channel. We look left, we find our prior swings. We try to get just above those prior swings. Ideally, sometimes you can't, and all you can grab is a failure. Let those buyers come in and try to buy it back into that range, right? Let them try. You'd be amazed how many times they will. You'll be amazed how many times a market makes a strong run down. It'll pop up above the moving average. The buyers will come in and think, oh, we're going back. No, we're probably not. It's such a bear move. We're probably not going back to those highs anytime soon. We're probably going to end up right back at those lows. A failure pattern is a great setup off the high of that channel. And if you can connect those lows like that, man, oh man, it's tough to lose money with that setup. So look for that over here. Or also, too, what if we took out those lows and now we start to grind, right? I love that setup. I love that grind, right? The kind of pop and grind. Draw that trend line nice and tight, okay? Do not waste your time and go big channel like this. That big channel will waste your time, okay? Once you see it start to grind down like this, draw that trend line nice and tight, anchor off a bigger one. Okay, that's the tricky part, is you want to anchor it off some sort of higher level up there. What that does is that allows you now, as it kind of grinds down, it allows you now to basically fool the other side of the market when it pops up off of that low. And believe me, when I was a new trader, I thought every strong pop in a bear market was a reversal, and it's not, right? We know those are buyers getting out. Right? That grind down is basically liquidation now. Buyers getting out. The market doesn't need bears to go lower with the bulls just exiting their positions right now. It rolls lower. And once they poke their head up above that high, this is where all the pros come in, right? Because the pros aren't chasing it going lower, right? Markets don't grind down because people are selling it. They grind down because the opposite side of the market is getting out of their positions. That's why it grinds. Right? That's why it grinds. It grinds because there's nobody there to keep it, to pop it back up again. Once one stops grinding, pops up, that's your sweet spot right there. That trap, that failure. Remember, first leg, third leg is a really easy way to fine tune that exit. We have a pretty good idea here that 453. I would expect 453 for the bears is going to be a pretty good objective here for those bears to tomorrow. We'll see if they can get it. Right now, looks like the bulls are trying to spice this thing up here a little bit as we go. Nasdaq looks really, really good. Right now, the question is where do we go from here? Right? Do we go back down to those lows, buy back up, break down? Do we keep on rotating for the short off the high? Or do we rotate and pop right back up into that trading range? Honestly, I would love to see the long side get a shot at this week. I would love to see that nice move back up into that trading range. That will probably be pretty easy trading tomorrow if that's what happens tomorrow. So if I had to choose, I would choose the buy side, but I don't care. Neither should you, right? I don't care what the market gives us. We're in the business of taking whatever the market gives us. That's all we can do. We don't have profit goals, trade goals. The worst thing you can do every day is going to the market saying, I'm going to make $100 today. I'm going to make $500 today. What you want to do is you want to go into the market every day and say, all right, market, give me what you got. I'm going to take whatever you got. If it's one trade, if it's two trades, if it's 6 trades, take whatever valid good setup that you see. Some days are more than others. Some days are easier than others. But we don't go into the market every day saying, okay, my goal today is I'm going to go make $300. You're asking for trouble because you're putting a constraint on yourself that you don't control. You don't control how these markets work. Right? If your goal is a monetary goal every day, you're really setting yourself up for disaster, in my experience. Anyways, off my soapbox, wrapping things up here on crude oil. And by the way, if you're still watching this video right now, it's like 2 hours into this video right now. So kudos to you. You are the person I make these videos for. If you're still watching right now, you got to do whatever it takes. Get into my trade room, get into our courses, learn this stuff. Because if you're willing to dedicate this much time to your learning on this YouTube channel, I can only imagine what you'll do with this once you actually get the tools you need. Chances are it hasn't been lack of effort, for you not making money. It wasn't lack of effort for me when I was a new trader either. I put all the effort in. The problem was I didn't have the sequence. I knew the tools, but I didn't know the right sequence to use the tools. So I'm always so excited when I meet somebody who watches these videos all the way to the end, because if you want to put the effort in this much, once you get access to all the tools you need and how to use those tools in the right sequence, you're going to be unstoppable. Anyways, back to our oil here. Oil is the same idea as the S&P and the Nasdaq. Obviously a little bit different because the oil is very bullish right now. But in order for us to trade oil tomorrow, let's go back in time 24 hours ago and let's think about what happened yesterday. So yesterday we came out here and I said, literally, word for word, oil is pretty straightforward. It's a bull market into a trading range. So what do? We find levels of support below the range and we buy pullbacks for a retest of that high, right? I mean, that's exactly what we talked about 24 hours ago on this same video 24 hours ago. And sure enough, that's exactly what happened, okay? Now, what happened back at that high? Okay, what happened? We had that big move up, right? Again, yesterday's big move up. We get that pullback and we retest the high here right now. Now, what do we do from here? Nothing. So now the big question is, what's going on, right? The buyers obviously have control right now, but they're struggling. They need to give us more proof on this. That's the first thing we see right away. If this market was really confidently bullish right now, we would be pushing back to 110, right? Last week's close, 110.61, right? There's no reason. And then look at this. Look at this move right here. That strong move right there. Why are we not retesting that high right now? Why did we not retest that high already? In other words, again, it's what didn't happen that I think is the most important clue here right now. So what this tells me is that we have not a problem, but we're sitting literally right at that high. So you have to think, okay, where do we go from here? Do we make our move down to these lows and buy back up, right? It could easily be a big channel, okay? It could also be one big range. Remember, this is just like the S&P and the Nasdaq. We go up, they double top, do they come back down? One big range, right? Buy off that low. Okay, you can see here too, that channel right there, channel right here, right? So, buyers, are the buyers basically telling us, right? No, it's too expensive, right? Is this what we call rejection at these highs? Would the buyers like it better if it went lower? Would that give them, would that attract more buyers? Probably. Or maybe we're waiting for some more information, overnight, a lot of stuff happening overnight. Break those highs there. If they can break those highs, which in all reality really should happen. They had that strong, a good example here, right? First leg, third leg, right? We've talked about the first leg, third leg. That's a three-legged move. 1, 2, 3, right? First leg, third leg. We mentioned this earlier, right? To fine-tune your targets. Anyways, we have such a strong move up here today. The fact that they're just hanging out inside this, what looks to be a range here, again, it's just what's wrong? Like, why didn't we at least go back to retest the high and then come back down? That would make more sense. So something's up, right? It might be the range here. It might be a new range developing here. Again, buyers want to get through this high and they want to go up, right? Hit that last week's close. Now, what do bears want? Bears have quite a few options too. As you can imagine, the bears can easily double top this sucker and sell it back down again. They definitely can. Obviously, we're going to be careful because it's so bullish right now, but that is a valid setup. I also think, too, there'll be some money to make if we go lower. I also think, too, there probably is money to make, if I can get my act together here, there probably is money to make going lower here, right on the way lower. I think you probably can make some money going lower here. and then pick it back up and buy it back up again. So I do think there's able to be, you could probably make money on both sides of this market tomorrow if we get all the setups that we like here. Okay, let's get the game plan together here. Now, we've talked a lot about breakouts, a lot about failures here today, right? So, for example, if this thing does kind of slingshot run higher here, this is exactly where a pop and grind could come in. Absolutely, right? Pop and grind, draw off that high, mark that low, grab that first test because you know it's the best test, right? Right? Pop and grind, first leg, third leg are symmetrical. Again, think 110, right? 110 is the objective. Or we retest that high. We pull back to the moving average. We hold the pullback and we jump, right? No, not like that. Not like that. We don't just hit no, not that one. We jump right off that moving average. We hurry up, find that high, find that low, grab those traps. And again, think about 110 from there. First leg, third leg is that target. Or unlike the S&P and the Nasdaq, well, I shouldn't say that. The S&P and the Nasdaq are way down here, right? So they've got to go all the way back up. All oil has to do is just pop, right? So for example, a 2-try breakout. A 2-try breakout will be a great setup on this one, right? So strong move, right? Pop, shallow pullback, higher high in price. What do we always say? Traps, baby. Great pattern there. Now, these are, I can't say guaranteed on these videos, right? But this is about as close as you're going to get, right? To almost a guaranteed winner, right? Very, very reliable setup. Strong move up, right? Strong move up, shallow pullback. The shallow pullback is the key because the shallow pullback doesn't allow anybody to get in, right? All the fib traders don't get in. The pivot, nobody gets in on that pullback. The higher high basically makes sure it's not a V top, right? Because it does it sometimes. So that's a great little trap, right? As we go there. One of my favorite breakouts, that pop, shallow pullback, higher high. And again, this will also apply to the S&P and the Nasdaq. But remember, this one has to be above that major resistance, right? The S&P and Nasdaq have that big top, right? So we have to get through that top up there and really pop and then grab that 2-try trap. Does that make sense, right? So we have to get kind of back into that range and then we can grab those trap setups going higher there. Or we retest that high, right? Take out that high now. Now the buyers come in. These are the weekends now. Right? They try once, they try twice. Where are their stops? Okay, where's our objective? Where does the market want to go at this point? If it's struggling at these highs, where does it want to go? It wants to go take out these lows, take out those lows, right? It basically wants to target the opposite side, right, of this range. Okay, buyers try once, buyers try twice. Where are their stops? Sell right into those stops. As the market rolls lower, we find that new channel. And again, you know this by now, right? We've talked about this many times already. 2-try failure. And again, trap, failure, pullback off of that high. Now, I also think there's probably some money to make if we go up, retest, and then come off this like this, right? Let's say we go up, retest, and then all of a sudden, 1, 2, bam, right? Strong jump going lower. When that happens, you can almost always find that channel, mark off that low, mark off that high. You can almost always expect whenever you see a strong reversal like that, you're probably going to get at least a retest of that low. So you'll see me do this all the time. We'll scalp a little bit right off of that first channel. Right? Again, 1, 2, 3, and then of course that strong move. We're grabbing a trap setup, a failure setup there, and then again from there, can we buy it now? Can we buy it? Oh yeah, we can. Absolutely. Right? They retest that low, bears once, bears twice, absolutely buy it right back up again. Does that make sense? You can make money on both sides of it. If you get that real strong whip off that high, just find that new channel, hit that first test, and then watch. Does it keep on going or does it struggle? If it struggles, now you know all the stops are sitting right there and you can just pop it right, literally buying those stop losses. Where's the market want to go back at this point? Back to those highs. Right? It wants to take out that high. That's where your target goes on the opposite side. All right? It may also be up and pop and grind. Remember, the grind's a giveaway, right? The grind's an easy giveaway. Find that channel. Again, these are very, very reliable setups. At that point now, if it starts to grind down like that, they want to go back to this low here. right? Because that means the buyers are walking away from this. Remember, anytime it grinds like that, it's not going lower because of bears. It's going lower because of buyers, right? The buyers aren't buying into it anymore. And that's why professionals will come in and hit that, because they know, the opposite side of the market is basically laying down arms at that point, right? They're not defending it. At this point, now they're trying to go back down to retest that low here. And I do think that whether it's here, right? Whether it's here for a 2-try failure, right? Back up, grab that channel. I think you can look for that setup here, right? Failure, first pullback here. I think you can also apply it down here too, right? Now, if we end up all the way down at that low, all right? If it really, really runs, like really, really strong, okay? Really strong, like this one, right? Good example right here, like this one, okay? Real, real strong. When it pulls back to that moving average, think about a trap entry. Okay, we talk about this in our advanced classes here at School of Trade, but when you have a relatively deep pullback, I use the 1, the 2, and go from there. I can be pretty aggressive with that because we're still a bull market. If this thing turns over and just runs lower like this, you have to remember they're going to want to retest that low. So the safest bet, the most reliable way to do it is if you don't get a retest of that low, think about some sort of trap entry to make sure you're buying as low as you can. Because remember, with all that momentum, as it goes higher, you're going to have more bears coming in trying to sell into it, right? Because again, anytime we see a strong move, they'll try to sell into it. So if the bears, again, if we have a very strong move down into support, I start thinking about either first, give me a retest, because if it runs all the way down and we see a retest, now that's mission accomplished, right? Now the bears got what they wanted. Now they can be a whole lot more aggressive, right? Now this is all the weak hands now, right? These aren't pros down here, right? The pros are right there. The pros are selling the retest, right? Because they know how these markets work, right? The weak hands, the inexperienced traders, they're coming in later going, oh yeah, we're bearish. No. We are bearish, but we're in the wrong spot now to be selling at this point. We've already retested now. The smart money is taking their profit. This is the dumb money isn't the way to say it, right? But lack of a better word, these are the weak hands, the inexperienced traders. They're selling into it now, and of course their stops are right there, just begging to get hit. So keep that in mind. If it really runs, think about a 1-2 trap before the retest. If it goes back and retests, okay, now we can get a lot more aggressive, 1, 2, and then go from there. We don't need that trap. Hope that makes sense, right? It's a little more advanced tactic there. We'll talk more about that stuff, obviously, momentum, in the video courses. But that gives you a really good roadmap here for trading this market. Got a bunch of potential here for a breakout. Watch this range. If we start going sideways here in this trading range, what do? You keep looking for those pullbacks, trapping in those bears, and back up we go. If this goes into a range up here, then that range becomes a magnet. It's exactly the same thing for the S&P and the Nasdaq. Anytime we have a range, that new range becomes a magnet. What we do, we find levels of support below the range. We rope in those breakout traders with a failure, and we try to go back up into that range. Or we wait for it to break out. 1, 2, 3 breakout. Find that new channel, right? Hit that first pullback, right? Pop and grind breakout. 2-try breakout. Make sense? All right. You're probably sick and tired of hearing my voice at this point here. Let's wrap it up before my tongue falls off here tonight. What a great week. Great day today. Tomorrow's around the corner. Finally Friday, right around the corner. Guys, don't forget, if you're looking for a place to learn and trade along, our trade room is designed for a new trader who wants to learn the basics and do it right the first time, or an experienced trader that just simply hasn't had access to the right tools to put the thing together in the right way. That's really all trading is. You know the inputs, you just don't know the sequence to use it. And that's where I come in. I have all the worksheets, all the game plan to follow, and I would love to have you there with us, trade right along with us in our trade room. I'm going to put all of the membership links, all the free course links, all the membership links in the description of the video. Grab those links here. Don't be afraid to call the office. All right, I know, I talk fast on these videos, but I promise I will slow it way down. I'm actually a pretty chill guy in real life, but I have to make these videos relatively quick, right? As quick as an hour can be. But so I hate to rush through these things, but call the office. We'll slow it down. Make sure you have all the right tools you need. Get the account set up, and we'll get you back on track. All right. If you put in a little bit of effort with me, you're going to get some great results out of this, right? So keep in touch. Again, any questions, drop those questions in the comment section below. You better hit that like button before you X off here. Make sure you subscribe. And if I don't see you tomorrow morning at the opening bell, come back and see us next time. We'll come back next week. We'll keep this party going. That's it for me tonight, guys. Have a wonderful, wonderful day tomorrow. Have a great weekend. Enjoy hopefully some springtime temperatures wherever you are. Hopefully there's no snow on the ground wherever you're watching for right now. I'll see you guys next week if I don't see you tomorrow. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.